So, you're doom scrolling Zillow at 2 a.m., falling in love with houses you swear you can't afford, or can you? The harsh truth is that most people have no clue what their salary actually gets them. Some buy way too much house and end up broke. Others play it too safe and miss out completely. In this video, I'm breaking it down income by income, from $40,000 to $200,000, so you'll know exactly what price range you can actually afford without wrecking your future. Don't just window shop, subscribe, and like now, because understanding this is the difference between renting forever and finally owning smart. The 28-36 rule, your baseline. Before we talk salaries, let's get one golden rule straight, because if you ignore this, it doesn't matter how much you earn. Financial planners use the 28-36 rule. That means no more than 28% of your gross income should go toward your mortgage, and no more than 36% toward total debt, including credit cards, car loans, student debt. Example, if you make $60,000 a year, your max mortgage payment should be around $1,400 a month. That's it. Now that you know the guardrails, let's see how this plays out by actual salary ranges. $40,000 salary, starter zone. Can you buy a home making $40,000? Yes, but think starter, not dream. At this income level, your max monthly mortgage payment is about $930 if you're playing by the 28% rule. Translation? You're not buying a mansion with a pool and a Tesla charger. You're looking at something in the $150,000 to $170,000 range at today's interest rates. Think small condo, maybe a townhouse or a starter home that's cute if you squint and ignore the 1970s carpet. In some cheaper markets, you might luck into a decent single-family home. But in big cities, yeah, good luck. You'll probably be choosing between space, location, or whether your bathroom has room for an actual sink. The upside? Getting into the market at this level is still a power move. Even a humble beginnings condo lets you start building equity, and equity is basically monopoly money you can trade in later for a bigger, shinier place once your income grows. But add $20,000 more in income, and suddenly the game changes. $60,000 salary, entry to average. $60,000 is basically the starter pack income in the US. Super common, super average. So what does that actually get you? With a $1,400 monthly housing budget, you're in the $220,000 to $250,000 home range. In many suburban areas, that's totally doable. In a big city though, that's basically the budget for a parking spot, maybe. And here's the kicker, even if the math checks out, you'll still need around $11,000 to $15,000 up front for a 5% down payment. Which means unless you've been hiding a secret savings account or robbing banks, that's the real hurdle. So yeah, $60,000 can buy you a house, but don't expect HGTV vibes. It's more fixer-upper than dream home reveal. And hey, if this is already making you rethink your Zillow browsing, smash that like button. It tells YouTube this video deserves to save more people from financial heartbreak. Now let's level up into six figures. $100,000 salary, comfortable zone. This is where people start flexing, like I make six figures. Cute, but how far does $100,000 really stretch? Your $2,300 housing budget gets you a $350,000 to $400,000 home. In the suburbs, that's a comfy single-family house, maybe even brand new with a garage. Nice. But in LA, San Francisco, or New York, that $100,000 flex turns into a reality check. A $400,000 home, there might be a shoebox condo with neighbors close enough to share Wi-Fi, or a fixer-upper that's one leaky pipe away from being condemned. So yeah, $100,000 works in Normalville, USA. But in pricey metros, it's not a golden ticket, it's a coupon that expired yesterday. Double the income though, whole different ballgame. $150,000 salary, high income buying power. Now this is where real options open up if you don't lifestyle creep yourself broke. At $150,000, you can spend $3,500 per month on housing, equating to about a $550,000 to $600,000 home. Add in a strong down payment, and you could be comfortably looking at $700,000 properties in many regions. But what if you're in the top bracket? Let's talk $200,000 plus. $200,000 salary, upper class choices. At this level, the bank will love you. But that doesn't mean you should max out. $200,000 per year gives you a housing budget of about $4,600 per month, or a $750,000 to $850,000 home. With smart money management, this range can get you luxury suburbs or even high-end city condos. But remember, just because you can afford it on paper doesn't mean you should stretch that far. Quick reminder, if you're serious about financial freedom, subscribe right now. This channel is about getting rich without falling into money traps. And speaking of traps, let's cover the costs people forget. The hidden costs nobody tells you. Spoiler alert, your mortgage isn't the only thing you're paying. Home ownership comes with property taxes, insurance, maintenance, and HOA fees. On average, that's an extra 1 to 3% of the home's value per year. For a $300,000 house, that's $3,000 to $9,000 annually, just to keep the lights on and the roof from caving in. So how do the wealthy avoid getting crushed by all this? That's where our next point comes in. The wealthy buyer's secret. In comes the millionaire move. They don't buy based on what the bank says they can afford. They buy based on freedom. Wealthy buyers often spend way less than the 28% rule because they want margin. They want cash left for investing, travel, and emergencies. They'd rather buy a $400,000 home on a $150,000 salary than a $700,000 one that leaves them stressed. Remember, the bank approves you for the maximum you can handle. The wealthy choose what lets them sleep at night. Why banks will lend you more than you should take. And the thing most people don't realize is that banks will often approve you for a mortgage that stretches you thin. Why? Because they calculate based on gross income, not what's actually left after taxes, insurance, groceries, and life. If you've ever thought, wow, the bank says I can afford this huge loan, chances are you can't. Banks aren't evil, but their goal is to lend money, not protect your budget. That's why sticking to the 28-36 rule and running your own numbers matters more than blindly trusting pre-approval. And if you think the bank is being generous, wait until you hear how your actual lifestyle can change what you afford. Lifestyle choices can make or break your home budget. This is where reality slaps you. Sure, on paper you can afford a $600,000 house, but toss in travel, kids' private school, or just the occasional dinner that isn't microwave leftovers, suddenly that mortgage feels like a chokehold. Owning your dream home shouldn't mean sitting on the floor because you can't afford a couch, or worse, skipping vacations just to stare at those four walls. The smart move? Pick a house that leaves breathing room, because real wealth isn't about buying the house, it's about actually keeping it while still living your life. Let's sum it up for you so that you don't miss out on anything. If you earn $40,000 a year, your sweet spot is around a $150,000 home. At $60,000, you're looking at $220,000 to $250,000. And with $100,000, you can reasonably aim for $350,000 to $400,000. A $150,000 salary bumps you up to the $550,000 to $600,000 range, while $200,000 puts you closer to $750,000 to $850,000. But remember, it's not just about the numbers. The 28-36 rule keeps you safe. Hidden costs like taxes, insurance, and maintenance add up, and banks will often approve you for way more than you should actually take on. Plus, your lifestyle choices, whether that's travel, kids, or just enjoying life, play a huge role in what's truly affordable. At the end of the day, the real key isn't maxing out what you can buy, but leaving enough breathing room so your house builds wealth instead of draining it. At the end of the day, asking how much house can you afford isn't just about math. It's about lifestyle freedom and avoiding the trap of becoming house poor. If you want wealth, don't buy the most house the bank says you can. Buy the house that still lets you invest, save, and actually enjoy life. You've got two choices right now. Option A, click away, keep guessing, and maybe end up broke in a house you can't afford. Option B, hit subscribe, watch the next video, and start mastering money like the wealthy do. Your move, Stickman out.